Oh, we're live. All right. Thank you for tuning in. This is Chats During Naps. It is the only um, talk show where, we have an obstacle course. Will the children stay asleep? As you can see, the one on my back is not asleep. So let's get to it. Today we have Darcelle Dixon Hunt from Balanced Business Management. She is a tax professional with over 30 years of experience. So without further ado, because we're not sure how long they'll let us conduct this interview, let's get it started. Darcelle, thank you so much for joining us. How are you today?
I'm great. Thank you for having me.
We are so happy to have you. Let's get started. So, outside of the never-ending deadline that is COVID-19 right here and the tax season that has extended several months past April, can taxpayers, specifically business owners, expect to be able to claim additional deductions for tax year 2019?
The short answer is no, because the tax year officially ended 12/31/2019. But along with the extended deadline from April 15th to July 15th, you are able to make capital investments that you can deduct through July 15th. By capital investments, I mean opening or increasing IRA accounts, having deferred installment sales of property, establishing annuities. Short answer, creating or adding to long-term investments are the only deductions you can now claim for 2019 as of July 15th, 2020.
Okay. All right. So the short answer for 2019 is no, no extra deductions possible. Now, what can business owners do to prepare for 2020? More importantly, are there any changes that will be coming out that we should, as business owners, be on the lookout for?
I've personally dubbed 2020 as the year of the credits. In spite of there being so many COVID-19 restrictions,
That's
it
right.
has allowed our government to understand our needs. And taxes are the tool that the government uses to get you to do what they want. Now, that's not a bad thing. For instance, the
Yeah.
government wants us to own homes. So, what do? They give us credits for mortgage investments,
Right.
mortgage interest payments, property taxes, capital improvements, energy savings devices. What do they give renters? None of these.
Wow.
They also want us to have children. So they have a list of children credits, including my favorite one being the education credit, where you can save for your child's education, and each dollar that you save is deductible on your taxes.
Mhm. Wow. Wow. So, just to reiterate, for those that are just tuning in, tax year 2020 is the year of the credits. As a business owner, this is great news because, as you know, a lot of businesses were impacted by COVID-19. And so being able to take advantage of the additional credits that are out there will definitely help business owners and, more importantly, their families going forward. Um, are there any other credits that business owners can look out for?
Well, Chandra, I like to emphasize the business investments, or better stated, investing in your own business.
Mm-hmm.
There are so many millions of dollars that are being put in place to provide loans and grants for new businesses and small business owners.
Mm-hmm.
The way to receive those grants is through a variety of applications. This is where I advise all business owners to be in touch with their local politicians on a local level, on a city level, on a state level, on a federal level. All of these entities have websites. So if you live in the city of San Diego, you can go to the San Diego City website, look under their business uh, kind of index and find out who the assembly person is connected with that and get to know them, because that way, when you ask for an application, they'll know who's asking for it. They'll know that they've had some interaction with you. And that's what we call putting your application on top of the pile. But knowing who represents you is vital for any business person.
I just muted my mic for a second. So when you say talk to your local representative, do you mean, I'm going to put myself on mute one more time.
It's difficult to be superwoman. Anybody listening who was at mom's chats during naps, I applaud you tremendously. You're superwomen, and don't give up. It does work, because guess what? They do grow up.
So your babies are, of course, well past the chats, the nap time during the day.
But if they're around, I wish they would take a nap.
So I apologize. I got a little derailed in my thoughts there. But let's get back to 2024 business owners. When you say talk to your local representative, do you mean oh, I'm sorry.
It was bound to happen. Let me explain what I mean while you deal with that wonderful bundle of joy. When I say talk to them, first of all, get to know who they are,
Right.
because we're talking about loans and grants that they have in their specific areas of expertise. Every government office has a business segment, most of whom are connected with the SBA, the Small Business Association. Now, the one requirement that I have to emphasize before you talk to anybody is to have your records in order. Know what your expected income is, know what your intended expenses are, and have a plan, whether realizable or possible, to have those expenses be less than your income so that you will be showing a profit within 3 to 5 years. So again, before you talk to anybody, get your house in order, get your records straight, become organized, know terms that are used in business: assets, income, net profit, gross profit, expenses. All of these matter in terms of presenting yourself to someone who is willing to give you a loan, or better still, during COVID-19, give you a grant that does not require payment.
Right. That you bring up a very good point, especially when you talk about getting organized. So I noticed that a lot of businesses, I don't want to generalize, some business owners that I have spoken with during this time have said, Chandra, I stopped paying myself in order to manage other more pressing expenses. And then they go and apply for a loan, and then they get denied. What can you tell some business owners that have decided to, quote, stop paying themselves in order to keep other aspects of their business going?
I would prefer, rather than stop paying yourself, obviously you're paying yourself for food, clothing, and shelter.
Right.
If you're taking that from your savings or from other investment accounts,
Mm-hmm.
just list it as a payment from your business. Your business will reflect you operating in the red, so to speak, but it's
Right.
not because of lack of payment to you. You must pay yourself. In order to continue in business, you have to have a place to live, food to sustain yourself, clothes to wear. And since we're talking about chats with naps, definitely provisions for your children. So you
That's
are paying yourself. You're not just counting it. Please
right.
count it, because as Chandra did say, when you go for a loan, they'll ask you not only for your business financial statements, but your personal financial statements. And it has to show that you paid yourself, even though your business may be operating at a loss because of it.
Right. Thank you. Thank you for highlighting that. I want to get into some other questions. What type of clients do you typically work with?
As a business management company, my clients run the gamut of small business owners, professional athletes, high income earners, and those with complex tax returns. When I say complex tax returns, I'm speaking to people who may not have filed in 5+ years and have
Ooh.
various investments. Yes, they've been called in by the IRS after 5 years and asked to supply those past documents. It becomes complex when they don't remember what happened 5 years ago. And it takes forensic accounting, which is another facet of my business, in order to pull that information out. But for the most part, it's truly a high income earner that deserves and gets the most from my services.
Okay. Let's talk about complex taxes for a little bit. Um, now, um, what is truly the difference? You know, some people may say, "Well, I have complicated taxes. Do those count?" Can you walk us through what's the difference between complex and complicated taxes?
Well, the IRS and the state of California and most states have already done that for us. They will choose a 1040A for non complex tax return.
Mhm.
And a complex tax return always involves Form 1040. The difference between the two forms: Form 1040A has about 5 lines.
Okay.
Form 1040 has 27 lines and several different forms attached to each line. So, with that being said, having an income, having a job is not enough to have a complex tax return. Having a job, having children, children in college, having a business, having investments,
Mhm.
having a variety of side businesses cause you to have a complex tax return.
Okay.
Also, money is a factor. Generally, a complex tax return will start at an earner weight coming in with about $200 to $500,000 in earnings.
Mhm.
Now, with those earnings are usually a number of investments, and the investment usually are within the $1 million to $5 million range. There's
Mhm.
so many other ways to have a complex tax return, but it's only one way to have a simple return, and that is to have a simple life. Go to work, come home, you're done.
Right. you know, we, you know, there's nothing wrong with a simple life, but I see what you're
I
saying.
love the simple life. I love it. I really do.
But what about complicated? Right? You mentioned complex. Um, what would classify taxes being complicated?
Primarily having more involving an income stream than a job. If you have a job and you own property and you have investments and you have caretaking duties that involve other people's investments under your name. The
Right.
list of complex reasons for having a complex tax return are as long as the number of forms required to file it. For instance, for me, a complex tax return requires at least 10 to 15 other tax forms, which result in a large tax package for filing. I could go on and on about that, but I'm sure your listeners don't want to hear the details where the devil is.
I know I could listen to it all day as well because it's so interesting. Taxes, as you know, are not my strong suit. So when I get to a chance to listen to an expert talk about it in a way that I can understand, I am all ears. You know, I've had an opportunity to work with you, and I've noticed that the difference from working with previous tax professionals is that your quality of work is outstanding. What do I mean by that, right? How do I know as a non-expert that your quality of work is outstanding? It's because when we received a second opinion from you, we found money that was on the table. I either owed significantly less or I didn't owe any money at all. Can you share with the audience at a 50,000 level overview, like what is different about your processes in particular?
When you say 50,000 level, are you saying that's the income level?
No, ma'am. I'm saying like an overhead, not getting into the weeds, right? We don't want trade secrets. We just would like to know, how is it that you can make, how do you provide added value to your clients?
I see.
Mm-hmm.
Well, with regard to tax preparation, since that is 1/3 of my business company, I require more documentation than most tax preparers.
Mm-hmm.
My belief is that any money spent could impact the results of the final filing. People
Mm-hmm.
tend to spend money not understanding how it affects their taxes. For instance, you may think that paying a cable television bill is not deductible, but if you require cable television to assist you with getting certain news programs that allow you to be on top of the industry impact for your particular occupation or industry, then you can deduct that cable bill or a portion thereof.
Right.
There's so many other things, your telephone bills, your laundry bills. Again, anything that you spend money on may impact what you do to earn money. And when it impacts what you do to earn money, portions of it or all of it can be deducted.
Mm-hmm. Wow. I didn't even think about the cable bill. Of course I didn't think about the cable bill. I'm not a CPA or a tax professional, but that's very interesting that, folks can look at their cable bill. They can look at their telephone bill. They can look at
Yes.
other expenses that they just spend or they just pay for. And now they can look at it in a new light in terms of a deduction for their business or their personal life. I want to circle back to something that you said earlier with regards to complex taxes. And that was for folks that may have a W-2, they may run a business, and they may have side hustles. When you talk about side hustles, what type of structure is most beneficial when it comes to filing taxes? Should those side hustles be, kind of a pass through under their social security number, or should they look at, forming an LLC or sole proprietorship to cover those side hustles?
Good question. Most people will only need to have a 1040. That means you're an individual taxpayer filing. If you have additional businesses and you want to protect your family against any liability from those businesses, it's highly advisable that you set up one of the varieties of corporations. There's a C Corp, which means it stands alone and it has to have a certain number of shareholders, generally a board of directors. Then there's the S Corp, which is you have to have between 1 and 100 shareholders,
Mm-hmm.
and the losses and the profits pass through to your personal account. Then there's an LLC, a limited liability corporation, where you have a certain amount that passes through to your personal account, but all of it is protected under your personal account is protected under liability of the setup of the LLC.
Mm-hmm.
There's an LLP, a limited liability partnership. That usually involves another household or another group with whom you want to interact, but none of you want to have that liability passed on to your personal life. All of these need to be understood before you go into them because there are certain requirements on a quarterly and annual basis that certify that this is an actual operational entity. If it is not, and it's done incorrectly, you
Mm-hmm.
will be penalized at an enormous rate for not having gone through the proper channels to input an LLC or any corporation into your financial picture. That
Wow.
definitely needs to be done with a certified accountant or certified business manager.
Right. Now, when you say significant fees, what type of percentage are we looking at here? Because if you live in the state of California, you are already paying significant fees in terms of taxes, right? So
Correct.
what is significant? Um,
Well, it's not a percentage of income because that's illegal to charge anybody based on a percentage of income, even if you're a government.
Right.
What it is based on is the requirement of the state in which you incorporate, if you're talking about incorporation. You know,
Okay.
one entity I failed to mention was the sole proprietorship, which
Mhm.
is the same as having a W 2, except that you work for yourself. But
Right.
that's contained in your personal tax return, and it's not covered by protecting your personal income with any losses. Now, on a corporate level, there are fees that you pay to states that you can incorporate in that have no state income tax. And that is where a professional can guide you based on the nature of your business. For instance, if you have an online business where you are supplying products or services across the nation and even internationally, it
Mhm.
would be best for you to register your company in a non-state tax state. Non-state tax states are places like Nevada, Delaware,
Mhm.
Texas, Louisiana. California is a state tax entity. So there are
Mhm.
quite a few fees that you have to pay regardless to whether or not you're producing an income in the state of California.
Right.
And that is an $800 annual fee to continue operating as a corporation,
Right.
and other fees as it goes along, continuing based upon your profit level. And that is in increments of millions. So without getting into those details, I'll just leave you with that broad picture about going to incorporate in a state that has no state tax requirement.
Mhm. No, that's very good advice. And for folks that do not live in California, you can trust myself and Darcelle Dixon Hunt here that it is extremely expensive. And that it pays to have a quality tax professional handling your taxes so that you can take advantage of credits, right? And take advantage of deductions that, not everybody knows about, which brings me to my next question. How do great CPAs, right, stay on top of 700,000 pages of tax code and counting? Do you read that every year?
I tried early on in my career and realized that no man works alone. I found an amazing organization, or it found me,
Mm-hmm.
and it's a national organization for accountants, financial advisors, tax preparers, CPAs, a myriad of financial personnel. The name of it is Accounting and Financial Women's Alliance.
Mm-hmm.
And what it did for me was gave me access to people who were at the top of their field. For instance, each year they sponsor a tax seminar at the beginning of the year, and people who write tax code come in and speak to us about the new changes that may affect us. Generally, there's about 200 to 300 new pages of tax laws each year.
Wow.
And these people are able to break it down into the ones that affect you and the ones that may not. And they cover all of the new tax laws as well as bring in tax laws that have changed that are new. For instance, they brought in a tax law in 2018 that was horrendous for people who live in large cities like, well, large states like California and New York.
Mm-hmm.
They were able to show how you can use the differences in the
Mm-hmm.
deductions or the reductions in those credits. And again, I feel as if I'm getting a little bit too detailed when I go into this, but let me just go back to say is we generally get the information from the horse's mouth, and that is rare. In order to do that, you have to belong to a professional organization.
Right.
And the rewards are much more than the dues that are required.
Wow. Did so I just want to reiterate something because that is one thing that I didn't know was possible prior to working with you. And is that there are CPAs, tax professionals out there that have a direct line of communication to, for lack of a better word, an executive within the IRS. And that, can you tell us how that has helped you with your client relationships?
Well, each year I have a good story. Last year, tax year 2018, was probably one of my better stories. I had a client come at the last minute. Of course, all clients who owe money come at the last minute, or who owe sums of money. Hadn't filed in 3 years. The IRS said he owed over $180,000.
Wow.
With the contacts that I had through AFWA, I was able to go through my directory, find the person who was in charge of the person who was issuing these letters, talk directly to him, and wind up having my client not owe that money, but actually getting a refund of $38,000.
Wow.
Of course, he's a constant client of mine now.
Right, I would be too. That is fantastic, and that is a wonderful good news story. I mean, how many people? I can just imagine the sigh of relief that he expressed, right, when he went from owing $180,000 to receiving $30,000. That is a powerful good news story for AFWA. So let me ask you this then. If an accountant, tax professional, CPA type does not belong to a professional organization, and this may be controversial, how effective can they be at their job?
Well, I would say from experience that not too effective.
Mm-hmm.
An organization that is national and international has established relationships. For instance, AFWA was created in 1938.
Mm-hmm.
Through their association, not only do they have access to business leaders, but they also have access to opening the door to seminars and continuing educational processes that you cannot get on your own. You have to be personally invited.
Right.
For instance, they host a seminar at UCLA through the Fink University. And if anybody knows anything about money, the people who support the Fink University at UCLA are members of the board of directors on Blackstone. And Blackstone is a corporation whose gross deposits are 3 times greater than the whole of the United States. So these are very powerful organizations that, again, they cater to professionals as well as organizations that support their industries. Whenever you go to a seminar at UCLA through the Fink University, you'll always be in a group with the graduate students from UCLA because they groom them right away to belong to these organizations. Now, those are the only people I know that get in free are students, especially if it's on a college campus. All the other seminars that are held are invitation only, and they only go through organizations. They don't go to individuals.
Wow. That is a powerful, recommendation for joining a professional group like AFWA. And as you mentioned earlier, not all professional groups are created equal. So
Correct.
Really depend where your tax professional, your CPA is affiliated with. We are actually coming up on just a minute and a half left of our time on Chats During Naps. So Darcelle, I'd like to ask you, what would you like to leave the audience with today?
Well, I already applaud you superwomen for listening and having children and starting your own businesses. The joy comes constantly. Being in control of your own fate is one of, I think, the most important freedoms we have. So please continue with business endeavors, and good luck to you all.
All right. Thank you so much for hopping on the show. And thank you everyone for tuning in. As you guys have seen, I have gotten a very good workout in during this episode of Chats During Naps. Tune in next time, next week, same time, Thursdays at 1 p.m. Pacific Standard Time, to listen to another great mompreneur give us some tips and insight on business today for moms. All right, take care, everyone, and we'll see you next nap time. All right.